Okay, so 2.1, recording transactions into T accounts. I'd already told you that we had used transaction analysis sheet, which was not an actual formal document that accountants make. We're going to go into something a little more detailed now. We're going to talk about T accounts. These two are just going to be something that we use while we're learning. Accountants will not be using T accounts. If you're following, we're on page 42 to 55 of the textbook. The things we're going to cover in this section, we're going to talk about recording opening balances into T account ledgers. We're going to talk about recording transactions into T account ledgers. We're going to find out what their final balances are. We're going to learn what a trial balance is, and then we're going to make yet another balance sheet that we already know how to do. Okay, so a T account looks like this. It's in the shape of a T. At the top of your T account is going to be your account title. We have a left side, we have a right side. We also call these the debit and the credit side. Okay, so we're moving into using more accounting terms like debit and credit instead of left side and right side. Okay, so Physio Central, as of July 31st, we've already talked about, has all of these assets, these liabilities, and there's owner's equity. What we're going to do is we're going to make a T account for each one of these. And our assets are all going to be done one way, our liabilities a second way, and the owner's equity a third way. Okay, so cash is considered an asset. I'm going to flip back to here. Think of this as being on the left side. Okay? If all of our assets are going to look the same way, they are going to have a regular debit balance on the left side because they are located on the left side of the balance sheet. So these are all of our assets are going to look like this. Our liabilities and our owner's equity are located on the right side. So they're going to look like this. They are going to have normal credit balances. And I'll explain to you what that means in a bit. Same with owner's equity. They're going to have normal credit balances. Okay? So every asset, if we are gaining money, we're going to put the amount on the debit side. Liabilities, anything we owe, we're going to put the amount on the credit side, and owner's equity, anything that we are worth, is going to go on our credit side as well. Okay, so if we were to open up each one, your cash would look like this. Because it has a normal debit balance, that means that that is where the money starts. It starts on the debit side, $6,325. That amount, I'm going to flip back, is coming off of our balance sheet here. Now, every one of our assets would look exactly the same. If we did one with our accounts receivable, we would do the same thing. I can't remember the amount if it's 3,000. Okay, it's going to go on the left-hand side. Okay, we're talking now about ledgers. A ledger is just a group, and it's going to look like this. This is going to be your ledger. One, it's going to look like this. Okay, so do you see cash has a normal debit balance, accounts receivables, normal debit balance, office supplies, debit balance. Now we're going over to accounts payable or into our liabilities. Accounts payable is a liability, so the money has to go on the credit side. Same with your bank loan, same with your mortgage payable. Your land is an asset, so it has to go on the left side. Building is an asset on the left side. Physiotherapy equipment is an asset, left side. Office equipment, asset, left side. P. Ramdas Capital, however, is an equity, which is on the right side. Okay, so what we've done there is we've just put in the opening balances to each ledger. Double entry accounting reminds us that for every transaction, there has to be at least 2 accounts involved, sometimes even 3. Okay, so now we're going to actually take our transactions that we did in our transaction analysis sheet and we're going to put them into T accounts. Okay, and it's going to look like this. So we're taking our cash. I should actually read the transaction 1 here for you first. So here's an example. Received cash as payments on account from patients. Now we know that the 2 accounts that deals with is our cash and our accounts receivable. Our cash is increasing. So the rule is with T accounts that if you are wanting to use an account, the money has to go on the same side as the normal balance. If you're decreasing it, it has to go on the opposite side. So our cash is increasing by 500. That's why we have to put it on the same side as this star. Accounts receivable, however, is decreasing because now we're going to receive less money from our customers. That is how come the $500 is going on the right side, because we're going to have to subtract them. Okay, so just a reminder, adding on the same side as the star, decreasing is on the opposite side. Okay, I have the wrong transaction here, so we're gonna write our own T accounts. Purchased $25 worth of office supplies from Central Supply Company with 30 days to pay. So we know that our office supplies are being affected, and so is our accounts payable. Okay, office supplies, normal debit balance. Accounts payable, normal credit balance. Our office supplies is going up, so I have to put the $25 on the same side as the star. Our accounts payable are also going up $25 because now we owe more. That's how come I have to put it on the credit side, the same side as the star. And if you always want to do a check, every transaction has to have a debit part and a credit part in order for it to be balanced. And in this case, you do. Okay, some more examples. Paid $705 cash now due to Equipment Unlimited for goods previously purchased but not paid for. Accounts payable is being affected, and so is our cash. Our cash is going down $705. It has to be on the opposite side of the star. Our accounts payable is going up. Our star is on the credit side. That's how come, we're paying it off. Our accounts payable is going down $705. And just do a double check. Do you have a debit and a credit? Yes, so you know you're right. Another transactions, purchased 3 new anatomical models for $545 each for a total of $1,635. A cash down payment of $535 was made. Okay. The remaining amount of $1,100 is to be paid later. So do you see how we're going to be having 3 different accounts here? Our physiotherapy equipment is going up. Our cash is going down. And our accounts payable is going up. Okay. Owner invests an additional $5,000 cash into the business. Cash is being affected. P. Ramdas Capital is being affected. Cash is going up $5,000. That's how come you're on the debit side. P. Ramdas Capital is also going up. That's why you're on the credit side. Calculating new balances. Now, when we put all of these transactions together, we want to find out at the end how much money is in each account. If we look at the cash, we take everything on the debit side and we add it up to get $11,825. We take everything on the credit side and add it up, we get $1,240. We need to subtract these numbers to find out what our new balance is going to be. And remember how we said that cash has a normal debit balance? That's how come the balance is going on the debit side. Same thing with accounts payable. You take your your two sides and you total them up. You subtract them. Accounts payable has a normal credit balance. That's how come the balance has to be written on the credit side. And you do that for each and every one of your accounts. Now what we want to do before we make an official balance sheet is we want to make a trial balance. So we're going to take everything off of here. You see your balances here. And you are going to make a trial balance that looks like this. It has two columns. You list all of your accounts on the left-hand side. Your debits are going to go in the first column. Your credits are going to go in the second column. And you just make sure that they equal. Single underline to show that you're adding, and double underline to show that you are correct. If you are in balance here, if these numbers are balanced, you can move on to make yourself a balance sheet. Your balance sheet is going to look like this. You already know how to make a balance sheet. The limitations, I want to go back here of a trial balance, is that it does show you that you're balanced, that you might actually have an error in one of these accounts. And your trial balance will not pick that up, unfortunately. So for instance, if you bought office equipment and you put it into office supplies, it's not going to pick it up on the trial balance. So you just have to be careful when you're doing your transactions. Okay, so there's your balance sheet. At this point, you might have some errors in your accounts, but you know that your debits equal your credits. So at this point, that's our most important piece of information. Okay, and then just a review of kind of the standards and the key concepts that we talked about in this section, talking about left side and right side. I don't like to use these T accounts with words. I like to just use a chart like this. We have our assets. We have our liabilities. We have our owner's equity. This really is the most important thing I can tell you at this point. Assets have normal debit balances. We increase them on this side. We decrease the account on this side. Liabilities, normal credit balances. We increase on this side. We decrease on this side. Owner's equity, normal credit balance. We increase here and we decrease there. Do not forget this. This is hugely important with where we're going in the next couple sections. Okay, so if we just want to review kind of what we've learned so far from the beginning of the course, the first thing we learned how to make was a balance sheet. We talked about ledgers and transactions, and remaining that the left side has to equal the right side, or the debits have to equal the credits. We then learned how to put the transaction to T accounts. Then today we also learned how to make a trial balance and then end off with a new balance sheet. Okay, so we're going to practice what we've learned so far.